and welcome to today's episode of the Oyster Stew podcast. I'm Libby Hall, Director of Communications for Oyster Consulting. Navigating the complex terrain of anti-money laundering requirements demands vigilance, expertise, and sophisticated systems. Suspicious activity monitoring isn't just about catching wrongdoers. It's about recognizing when something doesn't quite fit the expected pattern for a particular client or transaction. As the regulatory expectations for investment advisors continue to grow, so does the need for tailored, risk-based programs that go far beyond check-the-box compliance. From recognizing red flags and trading patterns to filing effective suspicious activity reports, or SARs, we'll explain how investment advisors can build AML programs that are both regulator-ready and operationally efficient.
Well, hello, everyone. I am Ed Wegener, Practice Lead for Governance, Risk, and Compliance for Oyster Consulting. I want to welcome you to our continuing discussion of anti-money laundering requirements in the financial services industry. AML continues to be an area of regulatory scrutiny, and not only because of the concerns with money laundering itself, but also because money laundering compliance covers a large number of problematic areas for regulators, including things like money laundering, terrorist financing, tax evasion and corruption, fraud, cybercrime, and elder abuse, just to name a few areas. And compliance programs are required to monitor for and report activity that is suspicious for any of this type of illicit activity or any illicit activity that's done either by, at, or through their firms. And that can be a very difficult task to do effectively and to be able to monitor for such activities because it's so broad. But the consequences of not identifying and reporting this type of activity can result in really significant fines and undertaking, as well as reputational damage for the firm. So today we're going to talk about effective practices for monitoring for and reporting of suspicious activities. And joining me today in my discussion is one of our top consultants, Bryan Jacobsen. And in addition to having served in compliance and AML roles within the industry, Bryan's also a subject matter expert in AML and digital assets, both of which are hot topics these days. So welcome, Bryan, and thanks for joining.
Thanks, Ed, and thank you for having me on the call.
Excellent. Well, why don't we just start off broadly? And when you think about regulators, whether it's FinCEN, who has primary responsibility for AML, or other more functional regulators like the SEC and FINRA, what is it that they require firms to do in terms of monitoring for identifying and reporting suspicious activities?
Yeah, great question. So I'd like to start off by first saying, it's important to understand that when it comes to SAR filing or suspicious activities, the first word is the key, right? It's suspicious. It doesn't necessarily mean that there's in fact wrongdoing. It just means that the firm has a suspicion, and therefore the requirement is to file on that suspicion if it hits a certain threshold, which I'm sure we'll get to. But one of the things that I think firms always need to do is, first of all, make sure that they have a good understanding of all of the different risk factors of their firm. So within Bank Secrecy Act and the FINRA rules, we always see terms like it has to be a risk-based program, and that's very true. So firms need to make sure that they're not doing a cookie-cutter approach to surveillance, but in fact they're looking at the risks that may impact their firm. So if a firm does activities such as perhaps they do low price securities, well, that's a risk factor that they should consider in their surveillance. Maybe they have a diverse client base, a demographically dispersed client base, so some of that may pose additional risks. So all of that needs to go into your overall planning for how you surveil for this activity. Once you have that identified, and in many cases, firms will create, and we've talked about that before, but they'll create that risk assessment that will help them identify all of the relevant moving parts for their firm and the risks that their firm takes. But once that's identified, then it's looking at vendors or internally that has the tools that can provide some type of alerting system or report-based system that will provide you those reports. So the first thing I would look at is obviously the type of risks, and then further, what tools do you need to surveil for those risks?
It's interesting. You mentioned tools, and having a system for monitoring activity is an important factor. But some of the things that need to be looked for are actually found during the interactions with the client. So I wanted to ask you about that. But before I do, one of the things that you had mentioned really kind of struck me is, the requirement isn't that there's actual illicit activity happening. It's whether the firm knows, suspects, or has reason to suspect. So that's very broad. That means, you just have to be looking out for anything that might give you an inkling that there's some type of this activity happening within your firm or through your firm, and causes you to investigate that and come to a conclusion that it's something that's reportable. So again, that's just an area where it's really broad. And the other thing, just understanding the firm's business is really critical component, as you had mentioned, because you have to take a look at it and say, what are the things that would cause me to be concerned? What are the things that I should be looking at? And that's going to differ depending on the type of business and risks that the firm has. And there's different stages within money laundering. There's the placement, the illicit assets into the financial services firm or into the firm. And then there's integration and obfuscating where that money came from. And then there's the placement of it back in. And so any one of those stages, the red flags that are identified could look different depending on what stage of the illicit activity is going on. So it's really important to really, like you said, understand the firm's business and then understand what type of activity could be happening within your firm that you need to be looking for. And again, as you mentioned, monitoring systems are one way of doing it, but another important thing is just to understand the interactions with the firm. So can you talk a little bit about how should firms be looking at those interactions with their clients to identify some red flags in terms of potential illicit activity?
Yeah, great question. So, one thing to always keep in mind, and I'm going to touch on this on a couple of different points, but it's certainly going to lead into the educational component of a firm's AML program. But when you look at your AML risks, right, there's going to be different risks that can affect a firm at different points in the life cycle of that client, right? It could be the onboarding risk, right? So think about who's involved in your staff that deals with onboarding type things, right? Who in operations or compliance or supervision will be responsible for bringing that client account to the firm. And then you have to look at the operational side and who's going to be responsible for handling the ACH and the ACAT processing and the wires for the firm, right? So that's another potential touch point that could present risks or red flags. And then there's, of course, transaction monitoring, who's responsible for that. So the point being is that when you look at the different risks for the firm, you need to look at the personnel that's actually going to be monitoring the risks, and then decide, okay, how can we develop a training course that addresses that? So what I mean by that is sometimes I'll go out to a firm and they'll have a great training course, and they'll talk about the 3 layers of money laundering, and they'll talk about kind of the generic red flags, right? If someone doesn't seem like they want to provide you with responses, or they're evasive or whatever, those type of red flags. And that's all great from a general training perspective. But when you look at the risks that someone that is maybe more on the front end with that customer or in a certain area, those risks, while good to understand from a general perspective, may not be the most relevant risks that they could potentially see. And at the end of the day, the frontline employees is always going to be your first line of defense. So having training that is designed to really address specific risks that these employees might see is much more important. So I always recommend that firms come up with different training profiles. So they might have like their operations staff as one profile, maybe the people that are involved in money movement as another profile, so on and so forth, and having customized training for them. Now they can have certainly certain parts of that training that runs across all employees, but then as it relates to specific employees, having additional things in there that will address specific things that they might see.
Well, you mentioned some really important points. Training is a critical component because, and not just that you're doing the training, it's the type of training that you're doing for the individual roles. So, like you had mentioned, it's important that they understand, what the AML requirements require of them, but also the types of things that they should be looking out for. And that's really where scenario-based training really helps, where you come up with different scenarios and you ask people after training them, what are some of the issues that you spotted here? That will give them practice in terms of keeping an eye open for the things that they need to really be taking a look at. And then another critical piece, part of the training is if they identify those things, or if they have questions about whether they identified it or not, is what's the escalation path for that? How do they get that to the right people who can then do something with it? So it ultimately ends up in the right hands, which is probably in your AML compliance program. Those are all really critical things to focus on, in addition to making sure that you have an effective means of monitoring activity so that you can look out for the types of transactions or activity that might be indicative of illicit activity. And so, Bryan, I wonder, having worked with a number of clients and having done this in your experience as an AML CEO, what are the types of activities that firms should be setting their systems up to be monitoring for?
Yep, I would say definitely focus on low price securities. That's always a classic one where the low price securities, even if there's plenty of legitimate trading, just the fact that most of them are illiquid or have low trading volumes, they kind of lend themselves to potential challenges around pump and dump schemes, that sort of thing. So definitely, if you have that type of business, having alerts and reports that address that are important. I would say money movement, any type of money movement, there has to be a robust process to monitor for that, right? A lot of firms are moving away from like third-party wire and ACHs, but if you do allow for that, then there needs to be additional scrutiny on how you process that. As we know, ACH fraud is so prevalent in our industry, and unfortunately, with the NACHA rules, once that ACH goes back, if the client claims that it wasn't them, it pretty much puts the firm in a negative spot because they have no choice but to refund the money or stop the trade or what have you, and that obviously results in losses for firms. So the point being is that having clear safeguards on that is important. Another thing that firms or clients sometimes may not always provide their actual net worth. They might say, well, my net worth is 500,000, but yet all of a sudden the equity in their account is $1 million. Things like that is very easy for firms to not necessarily have specific surveillance for, but they need to, right? In recent cases, FINRA has pointed to that as a red flag, right? I mean, if someone has $1 million in their account and yet they said that they only have 500,000 of liquid net worth, where's that extra money coming from? And then, of course, if there's any type of illicit activity, then that just proves their point. So definitely looking at that. And then I would say the onboarding process as well, making sure that there is a clear verification of the information. So what I often see is firms get hung up on the fact that within the rules, as we know, it talks about documentary and non-documentary means of verification. But using that risk-based approach, firms need to decide when is it appropriate to just do documentary, when is it appropriate to do non-documentary, and when a combination of the two might be appropriate. And that all goes towards the risk of the individual client profiles and how you perceive that risk. So there's plenty of room for discussion on that at the firm level. But the point being is that it should not be a one size fits all. Where I've seen firms get in trouble is where they've tried to apply the same logic to all their clients, and then unfortunately, something goes wrong, and that client demographic probably should have been considered maybe a higher risk client. So those are the type of activities I would really focus on, though.
You bring up a lot of good points in that and want to unpack those. I think one thing that you had said that really struck me is it's important to monitor activity, but you can't monitor that activity in isolation. You have to do it in the context of the type of customer you're looking at, because what might look like normal activity for one type of customer might be completely abnormal for another type of customer. And it's that difference that should cause suspicion. For example, if you see a lot of trading activity and a lot of money movement activity happening in, an active trader account that, is in this type of business, is sophisticated and can do that. That might be something that you see that type of activity and it's fine. Where if you see that same type of activity in a typical retail account, especially with a senior investor, that should raise red flags. So the activity is the same. The customer type is different, and being able to have those profiles to draw on is really what's going to be important. And so that customer due diligence leading into your suspicious activity monitoring is really critical. But it's also goes back to what you were talking about before about understanding the business and the types of things you should be looking out for. There are any number of different schemes that could be happening, and they all have different profiles. And it's really important to understand what those types of profiles are. And regulators have done what I think is a really decent job of kind of identifying as best they can some of those red flags. FINRA put out a regulatory notice 1918 where they identified for broker dealers a number of types of activity that should be considered to be suspicious. So it's important for firms to take a look at that type of guidance and say, do we have a monitoring system that would allow us to be able to find these things? Because if those things are happening within your pipes and you don't know about it, that's not going to be a good excuse if you don't have an effective monitoring program. But that FinCEN document is great. I know FATF has put out a number of typologies for different industries and the types of things that they should be looking for. The SEC puts out good information. Industry groups like ACAMS is another great source. And that's really where your most knowledgeable people like your AML CEO should be constantly looking to make sure that your systems reflect all that guidance. We talked a little bit about escalation, and Bryan, I didn't ask you this before, but I thought I would throw this out to you, just your thoughts in terms of between the monitoring of the activity, the identification of that activity, and the reporting, there's a critical step in there, and that's the investigation of that activity. And I know that's sometimes where issues can arise for firms with regulators. So I wonder if you could just briefly talk about, what's important to be thinking about as firms put together a program for investigating red flags.
Yep. So one of the challenges I see with firms is sometimes their investigation goes much longer than it should, right? I mean, they've the early part of the investigation discovered that the activity was suspicious, but the nature of, I think, compliance officers is we're trying to get to the end point and prove, yes, it was clearly XYZ illicit activity, or no, we can prove that it was not. But the point is that by the time you get to that, the investigation tends to drag out for several months, and then it creates either a late SAR filing, or because the investigation lasted so long that had you stopped it right at the front end, you could have stopped them from really doing any number of bad things over the next several months. So I've seen that in several cases. So what I would say is, when it comes to investigation, you need to be very proactive, right? Remember, suspicious does not necessarily mean that you've been able to prove every single point. It's just that you have enough detailed information to know that it does, at least on the surface, look suspicious. I always tell firms that, if you look at any regulatory action, I've never seen the regulators take action against a firm for filing too many SARs. Right? I've seen plenty of times where they've taken action because a firm didn't file enough SARs. So when in doubt, my recommendation is always to file, because again, that will never get you in trouble to file it. But that being said, my recommendation is always, do the investigation. Once you have enough information at your disposal to say that it's suspicious, file the SAR. There's continuation SARs, there's a continuation ways to update that SAR as you go. So if you find more relevant information, you can certainly update that, but file it immediately. Then, at that point in time, you should determine whether or not you have enough information with that initial SAR to whether it's restrict trading or do any other restrictions on that account or what have you. And then you can finish up any final pieces of that investigation that you feel is warranted. But again, never hold off on the initial part. And then as far as the escalation, I always recommend don't feel that this is individual sport, right? Doing an AML review and a SAR filing really is a team event in the sense that, you need, at a minimum, you should have certainly the AML CO, the president, and probably, depending on the facts and circumstances, someone in operations that can kind of walk you through the operational components, because many of these SARs are going to involve some level of operations, trading, or otherwise. So you want to make sure that is available. So, yeah.
That's an important piece, because you want to make sure that you have enough people involved that can really get a good understanding of what took place. But as we'll talk about later when we talk about filing SR, you also want to make sure, though, that it's only those people who need to know, so you keep the confidentiality that you need to with respect to SARs. One of the things that I had identified when working at FINRA, and we would bring AML cases, is it was rare that they were going to say they're going to deem activity to be suspicious and you should have reported. They're usually going to look at the process that you have in place and the quality of the process that you have in place, and that's where they're going to find fault. And one of the things that would come up frequently is the individuals that were responsible for following up on alerts and red flags. In certain cases, they would just rubber stamp the activity or the explanation that they had for how they closed out those alerts were cookie cutter, almost to the point where it looked like it was cut and paste each time. So it's really important to make sure that the individuals, this goes back to the training point that you're making earlier, that the individuals that are doing the investigations really are trained on what's expected in terms of chasing down those red flags. And then importantly, making sure that you have good documentation supporting the decisions that were made. And that'll be critical too, because if you do decide that a SAR needs to be filed, you want to make sure that you're providing or that you have access at least to the information and documentation that was put together at the time you did the investigation. So why don't we pivot then to the determination to file a SAR, and what are some best practice in terms of how to file a SAR?
Yep. So remember, when filing a SAR, it comes down to, I guess, the 5 W's and then H, right? It's the who, what, when, where, why, and how, right? So in every SAR filing, and let me back up by saying people should look at SAR filings as one of the few opportunities that the firm has to continuously showcase the efforts that the firm takes in surveilling activity, right? Because to Ed's point, or to your point, Ed, I would always say, put in exactly how was this discovered? Was it because of an astute frontline individual that overheard a customer say something, or they noticed in a background picture that there was, multiple cell phones that this person was using, or whatever the case may be, or it was an alert. But the point being is that a SAR is your opportunity to highlight that, look, we are doing a pretty good job, right? We have frontline employees that are looking out for this. We have surveillance tools that caught this. We have, whatever it is. And so every single SAR filing is, in essence, an opportunity for you to validate your program to the regulator. So it really is a great opportunity and should not be missed. But when you file a SAR, first of all, the one thing that I see way too much of is firms will use their internal vocabulary, right? Their 3-letter descriptions or a code for whatever tool or system. Well, more than likely, the person reading the SAR will have no idea what it is. Even if you spell it out, they may not know. So the point being is that be very exhaustive in your detail of exactly what you looked at. Stay really away from any type of internal dialogue or internal vocabulary. So if your internal operating system is called XYZ, don't say the XYZ did this. Just say that our back office system noted this, or the firm uses a surveillance tool called this, and that surveillance tool has an alert that does this, that's designed X, Y, and Z. But the point being is that even though it takes much more in the drafting, it's a much better quality SAR by just removing all of that internal dialogue or internal vocabulary. But after that, you want to talk about, the who, who is conducting the suspicious activity? Is it a coordinated effort? Is it an individual person? Is it, hopefully not, but is it an internal employee? Who actually was, who do you suspect having done that? Then you also want to talk about, the what, identify what transactions were involved that raised firm suspicion. You want to talk about the when, which is, when did this activity occur? Where is, where did the activity take place? Was it through your online portal? Was it through a sales representative or so forth? And then, the why is, why do you think it's suspicious? You can just be very, matter of fact, say, we believe it's suspicious because of whatever the facts are. And then, of course, the how is really for your benefit, right? How was this identified? It was identified because the firm has a tool that's can alert us on these facts, and it came up as a tool, and then or as an alert, and then we did further investigation and so on and so forth. So, the best thing that I can always say on a SAR filing, though, or the best advice is just be very clear, concise. Don't let personal emotion, because we all tend to get emotional. Just be very fact-driven. Exactly what did you see? Why do you think it's suspicious? And include all of the relevant points, account numbers, so on and so forth.
You mentioned the why, like why the firm thought that this was suspicious. And it reminded me, I was at a conference recently, and I think it was somebody at the FBI that was speaking. And, we kind of, having been in this industry for our entire careers, we can kind of look at something and say, oh, that's clearly suspicious. And what he was saying is, like, I didn't work in those roles. I'm reading this narrative. I don't necessarily understand why something is suspicious. And it really struck me. And I realize that's, something that compliance professionals might see and right away say, hey, that's something that needs to be reported. You really want to make sure that you're writing to the audience being typically criminal authorities, so that they understand why you thought it was suspicious. And another thing that they had mentioned was, don't discount how important even small bits of information are. So, if you think that you have a puzzle piece and you might not know how it fits into that broader puzzle, file it anyways. It could be really important. And some of the biggest cases that they have brought were because somebody provided them some small piece of information that pieced everything together. And it was clear that the person that provided that piece of information had no idea that that's what they were doing, but it was extremely helpful. So that's just, a reminder to overfile is never a problem when it comes to the regulators, and don't discount any piece of information as long as you've investigated it and you believe that it is suspicious. So one thing I did want to go back to, and on the monitoring front, I think it's really important, because we talk to our clients about this a lot. We talk about monitoring for transactions, and firms of any size have any number of different types of transactions going through their pipes. And often it takes the services of a third-party vendor and their technology to help firms be able to take that information and turn it into useful information for identifying red flags. So, Bryan, I wonder if you could talk just briefly about using third-party vendor tools to support your AML programs.
Yep. So especially when it comes to surveillance, I'm a big proponent. Well, two parts on the SAR, right? The surveillance and the case management. I fully recommend that firms consider outsourcing versus building internally. As we know, almost every firm out there has certainly limited resources, limited staff, limited money, and all that good stuff. And the point being is that even if you build the tool, you're probably not going to be in a position to really truly monitor that tool and make necessary updates in a quick manner, right? Or at least certainly not to the extent that a vendor that is their main tool, their main source of revenue, they're much more vested in making sure that any feedback is taken into account, that changes occur quickly, that they adjust to new rules and all of that stuff. So I would definitely recommend looking at an external vendor versus trying to build yourself. a tool. In general, I would say that most firms, if they've built a tool, it's probably not as sophisticated as many of the vendors out there. Of course, there's a risk. There's a cost benefit analysis there. Certainly, some tools can get very pricey, and that certainly needs to be taken into account. But I would always look at that. And then the other thing that I would recommend from a third-party perspective is looking at a good SAR case management tool, right? So a lot of firms, they don't really have a great way to organize or track all the SAR information. And remember, when you do the SAR filing, you're uploading the SAR and you're uploading the description, but you're not really uploading all of the background, all of the supporting documentation that goes along with that. That stuff is required to be maintained for 5 years after you file the SAR. And the point being is that some of these investigations can get certainly have a lot of moving parts, a lot of documents. And what I found is that firms may reference that in the notes, and even if they saved it in their internal system, their ability to pull that out of that system is very difficult. Whereas like a third-party case manager can actually take, you can use it to record all of your notes, all of the supporting documentation, and even better yet, it'll take all of the information from your system, the account name, number, all that stuff, and it'll pre-populate the SAR form. So really all you have to work on then is the narrative. So it just streamlines the whole process. Again, if you're ever called on one of those SARs and you need to produce those supporting documents, not having such a system could present challenges for a firm.
That's a great point, Brian. Another thing that to think about when you're thinking about third parties, a good third-party vendor is going to keep up on all the trends and patterns and things that they're seeing and all the regulatory expectations, and they're going to be updating their alerts to account for that. So it takes a little bit of the burden off of the compliance program within your department to be doing that as much, knowing that the vendor is going to make sure that they're updating their alerts to reflect, the current typologies that are out there. But also it's important for a good third-party vendor to allow there to be tailoring to your firm. As you had mentioned before, when it came to how you're putting these programs together, it's important to really understand the business and tailor your programs to that business. And so you're going to want to make sure that third party is able to allow you some discretion in terms of how you set your systems to make sure that you're looking for the right things given the risk at your firm. All really important things to be thinking about when you're thinking about how to address this really broad area of monitoring and reporting for suspicious activities. But again, this is something that regulators are really looking closely at. So really appreciate you providing your expertise, Brian, and we'll be back again to talk about more things AML in the near future. Thank you. Take care.
Thank you.
If you found today's discussion helpful, don't forget to subscribe for more episodes where we dive into industry strategies and best practices. For more information about our experts and our services, visit our website at oysterllc.com. Thanks for listening.